Title: Investing in the Future, AI's Impact on Finance and Miami's Role in Innovation. Introduction.
Welcome back to Finance Frontier AI. Today we're broadcasting from the vibrant city of Miami, Florida, a place known for its dynamic business environment, burgeoning tech scene, and strategic position as a gateway to Latin America. Miami is not only a hotspot for cultural diversity, but also a rising hub for finance and technology innovations. The city's growth in fintech and tech startups makes it the perfect backdrop for our discussion today. In this episode, we dive into the latest trends and developments shaping the future of finance and AI.
That's right. This city is buzzing with activity, from the cutting-edge tech startups to the thriving financial sector. The energy here is palpable, and it mirrors the rapid advancements we're seeing in technology and finance. Today, we have an exciting lineup of news and insights that you won't want to miss. We'll be exploring some groundbreaking achievements in AI, significant movements in the stock market, and the latest regulatory changes impacting the financial world.
Exactly. Miami's unique blend of innovation and opportunity sets the stage for a deeper dive into how these developments are influencing global markets and local economies alike. Whether it's the rise of AI-driven healthcare solutions or the impact of new financial regulations, we have a lot to cover. Let's jump right in and get started with our first story.
Before we dive in, make sure to subscribe to Finance Frontier AI on Apple Podcasts and Spotify so you never miss an episode. Stay updated with the latest insights and trends in finance and AI. Let's get started. Chapter 1: Top News of the Week.
Welcome to Chapter 1, Top News of the Week. Let's dive into the most significant headlines making waves in the financial and technology sectors this week. Max, what's our first story?
First up, we have a remarkable achievement by NVIDIA. Their stock surged, pushing the company's market value past $3 trillion for the first time. This milestone highlights the continued dominance of tech companies and the growing importance of AI technologies in the market.
That's incredible growth for NVIDIA. It seems their leadership in AI is truly cementing their place at the forefront of technology.
Absolutely. NVIDIA's advancements in AI are not only boosting their market value but also driving the entire tech industry forward. Their GPUs are fundamental for AI and deep learning applications, solidifying their leadership in tech innovation. As AI continues to expand, NVIDIA's technology will be increasingly integral in various applications, from autonomous vehicles to advanced robotics and beyond.
It sounds like NVIDIA's influence is only going to grow. What other factors contributed to this milestone?
The company's strategic investments and partnerships, especially in sectors like healthcare and automotive, have also played a significant role. By integrating AI into different industries, NVIDIA is not only expanding its market reach but also driving innovation across the board. Their recent stock split, effective June 7th, has increased investor interest by making shares more accessible to smaller investors.
Next, we have some significant movements in the stock market. Max, what's happening with the S&P 500 and Nasdaq?
The S&P 500 and Nasdaq composite recently reached new record highs, driven by strong performances in the tech sector, particularly from companies like NVIDIA and Apple. This rally is notable as it reflects investor confidence in the technology sector and signals robust market performance.
That's impressive. Can you tell us more about what contributed to these record highs?
Several factors contributed to these new records. First, the Federal Reserve's signals about potentially easing interest rates have boosted investor sentiment. Fed Chair Jerome Powell indicated that the central bank is not far from being confident that inflation is declining towards their target, which could lead to rate cuts soon. This news has been a major driver of the stock market's recent gains. Additionally, the CPI report indicated a slowdown in inflation, giving investors hope that the Federal Reserve might soon start cutting rates, further boosting market sentiment.
So, the anticipation of rate cuts is a big part of this. What else is driving these highs?
Another significant factor is the performance of major tech stocks. NVIDIA and Apple both closed with market capitalizations at or above $3 trillion, which played a critical role in pushing the indices higher. Additionally, economic data such as a promising consumer price index (CPI) report has fueled optimism. The CPI report indicated a slowdown in inflation, giving investors hope that the Federal Reserve might soon start cutting rates, further boosting market sentiment.
It sounds like tech stocks and economic data are key drivers here. Are there any other sectors or trends contributing to this rise?
Yes, technology was the leading sector, but communication services and industrials also saw significant gains. 9 of the 11 major S&P 500 sectors rose, showcasing a broad-based rally. Moreover, the Philadelphia Semiconductor Index reached a record high, led by gains in chip companies like NVIDIA, which soared by 5.2%.
This broad-based rally is encouraging. What does this mean for the market moving forward?
The record highs suggest a strong economic recovery and highlight the resilience of the tech sector amidst global challenges. Investors are increasingly viewing technology as a safe and lucrative investment, which could lead to sustained growth in the sector. However, the continuation of this trend will largely depend on upcoming economic data and the Federal Reserve's actions regarding interest rates.
Thank you for the detailed insight, Max. Now let's move on to our next major headline, which delves into some exciting developments in AI-driven content creation.
Absolutely. Advances in generative AI for video production are enabling the creation of high-quality videos from text prompts, revolutionizing content creation. This technology democratizes video production, allowing creators with limited resources to produce professional-quality content, thereby transforming the media landscape.
Generative AI is truly a game-changer for content creators. How does this technology impact the media industry?
Generative AI tools like OpenAI Sora and Google DeepMind's Veo are leading the charge. Sora, for instance, uses a combination of diffusion models and transformers to generate highly detailed and varied video content from simple text prompts. This technology is not only powerful but also versatile, capable of creating anything from a short commercial to a complex narrative sequence. It maintains visual consistency across frames, which is crucial for professional quality videos.
That's impressive. Can you give us some examples of how these tools are being used?
Certainly. Companies like Waymark are using generative AI to produce commercials quickly and efficiently. For instance, they can create a minute-long commercial in seconds, allowing for real-time editing and tweaking. This flexibility is invaluable for advertisers and marketers looking to create dynamic content on the fly. Another example is Leonardo.ai, which allows creators to generate and animate videos from static images, streamlining the production process and enabling rapid prototyping and storytelling.
It sounds like these tools are making high-quality video production more accessible. What other benefits do they offer?
Besides lowering the barriers to entry, generative AI also speeds up the production process significantly. Filmmakers and content creators can now focus more on the creative aspects of their work rather than the technical details. This has been particularly beneficial during the pandemic, where traditional shooting was challenging. AI tools enabled the creation of intricate visual effects and 3D scenes from existing footage, maintaining productivity under restrictions.
It's fascinating to see how generative AI is shaping the future of media. Are there any potential risks or concerns associated with this technology?
Yes, while generative AI offers tremendous potential, it also comes with risks, especially concerning misinformation and deepfakes. The ability to generate realistic videos can be misused to create misleading or harmful content. Companies like OpenAI are aware of these risks and are implementing safety measures, such as filters to block inappropriate content and watermarking to identify AI-generated videos. Ensuring ethical use and mitigating misuse is crucial as this technology continues to evolve.
Thank you for the detailed insight, Max. Let's move on to our next headline. Today's market movements have been significant. Max, can you explain what happened?
Absolutely. Today's market rally was driven by several key economic data releases and the Federal Reserve's decisions. Let's break down the most important factors. The CPI data for May showed that inflation is cooling down. The core CPI, which excludes food and energy, rose by 0.2% month-over-month, matching forecasts, but slightly lower than the previous month's increase of 0.3%. The overall CPI was flat at 0%, down from the previous month's 0.3%, and the year-over-year CPI came in at 3.3%, slightly below expectations of 3.4%. This indicates that inflation is stabilizing, which boosted investor confidence that the Federal Reserve might ease its monetary policies sooner rather than later.
That's good news for the market. How about the crude oil inventories?
Crude oil inventories showed a surprising increase of 3.730 million barrels, contrary to the expected decrease of 1.200 million barrels. This significant buildup in crude stockpiles contributed to a drop in oil prices, which is generally positive for consumers and businesses as it reduces energy costs.
Interesting. What did the Federal Reserve's announcements include?
The Federal Reserve released its FOMC economic projections and the FOMC statement today. The Fed decided to keep the interest rate unchanged at 5.5%, aligning with market expectations. Fed Chair Jerome Powell indicated that the central bank is confident that inflation is declining towards their target, which could lead to rate cuts soon. This news has been a major driver of the stock market's recent gains.
Thank you for the detailed insight, Max. Now let's move on to Chapter 2, where we explore additional major news impacting the financial and technology sectors this week.
Chapter 2, Additional Major News.
Welcome to Chapter 2, Additional Major News. Let's dive into the most significant headlines making waves in the financial and technology sectors this week. Max, what do we have first?
First up, we have a landmark decision by the U.S. Supreme Court. On June 1, 2024, the court upheld the constitutionality of the Consumer Financial Protection Bureau's CFPB funding structure. This decision reverses a previous ruling by the Fifth Circuit Court of Appeals that had declared the CFPB's funding mechanism unconstitutional. The CFPB can draw funds from the Federal Reserve, bypassing the annual congressional appropriations process, which was designed to ensure the agency's independence from political pressures. The Supreme Court's ruling confirms that this funding mechanism is in line with the Appropriations Clause of the Constitution. Justice Thomas, writing for the majority, stated that the CFPB's funding structure, which allows it to draw necessary funds to fulfill its duties, is similar to early practices in U.S. history where certain agencies were given financial independence to carry out their functions effectively. This ruling has significant implications for financial institutions, as it solidifies the CFPB's regulatory authority, likely leading to stricter oversight and compliance requirements. Financial entities will need to prepare for more rigorous examinations and potential enforcement actions as the CFPB resumes its full operational capacity.
Next, we have an insightful forecast regarding mergers and acquisitions, M&A activity. On June 5, 2024, it was reported that this year is expected to be particularly active in M&A as valuations reset, presenting significant growth opportunities for mid-market businesses. According to industry experts, the M&A landscape is set to rebound significantly from the slowdown experienced in 2023. Factors such as stabilizing valuations, increased corporate confidence, and an improving economic outlook are expected to drive this resurgence. The increase in M&A activity provides mid-market businesses with significant growth opportunities, allowing for strategic expansions and consolidations within various industries. This trend is particularly notable in sectors like technology, energy, and life sciences, where companies are actively seeking to acquire new technologies and capabilities to stay competitive.
Another major update is on the Secure 2.0 Act, which is making it easier for Americans to save for retirement. As of June 4, 2024, new provisions under this act are aimed at increasing participation and savings rates. The Secure 2.0 Act includes several key changes designed to enhance retirement security. The age for required minimum distributions, RMDs, has been raised to 73 starting from January 1, 2024, and will increase to 75 by 2033. This allows retirees to keep their savings invested for a longer period, potentially increasing their retirement funds. Beginning in 2025, individuals aged 60 to 63 can make higher catch-up contributions of up to $10,000 annually, indexed to inflation. This is an increase from the current $7,500 limit for those aged 50 and older. Additionally, the Act eliminates RMDs for Roth 401k accounts starting in 2024, aligning the rules for Roth 401ks with those for Roth IRAs. There are also provisions allowing for penalty-free early withdrawals for emergency expenses and domestic abuse situations. For instance, individuals can withdraw up to $1,000 annually for emergencies without the usual 10% early withdrawal penalty. Employers can now offer small financial incentives to boost employee participation in retirement plans and can match student loan payments with contributions to retirement plans, encouraging younger employees to save while paying off student debt. These changes aim to increase overall savings rates and encourage higher participation in retirement plans, benefiting Americans' long-term financial stability.
Finally, there are exciting developments in AI applications within healthcare. As of June 5, 2024, AI technologies are showing significant promise in areas such as diagnostic tools and personalized medicine. These advancements are attracting considerable attention from both the medical community and investors. AI is revolutionizing healthcare by improving diagnostic accuracy and enabling personalized treatment plans. For example, AI algorithms can analyze large datasets to identify potential drug candidates and predict their efficacy and safety, which accelerates pharmaceutical research and development. Additionally, AI diagnostic systems are enhancing the accuracy of medical imaging analysis, helping to predict disease progression and tailor treatments to individual patients. The integration of AI in healthcare also extends to operational efficiencies. AI-powered systems streamline administrative tasks such as scheduling, billing, and inventory management, reducing costs and improving overall efficiency for healthcare providers. Furthermore, AI-enabled remote monitoring and telemedicine platforms are making healthcare more accessible by allowing providers to monitor patients and conduct virtual consultations, ensuring timely interventions. These innovations not only promise improved patient outcomes, but also drive significant investment in medical AI technologies, highlighting the transformative potential of AI in the healthcare sector.
Absolutely. The advancements in AI applications within healthcare are truly groundbreaking. By improving diagnostic accuracy and enabling personalized treatment plans, AI is transforming patient care. Moreover, the operational efficiencies brought about by AI-powered systems streamline various administrative tasks, reducing costs and improving overall efficiency for healthcare providers. These innovations promise not only improved patient outcomes, but also significant investment opportunities in medical AI technologies. It's an exciting time for both the medical community and investors as we witness the transformative potential of AI in healthcare. Chapter 3: Significant Developments.
Let's explore the critical developments shaping the landscape of finance and technology this week. Max, what's our first story?
To begin with, we have ongoing discussions about AI ethics and regulations. As of June 5, 2024, the focus on the ethical use and regulatory frameworks for AI continues to be a significant topic as AI technologies become increasingly integrated into everyday life. The European Union has set a global precedent by implementing the AI Act, the first comprehensive law regulating AI. This legislation addresses areas such as transparency, use of AI in public spaces, and high-risk systems. Companies are required to be more transparent about their AI development processes and are held accountable for any harm caused by their AI systems. The AI Act mandates that companies developing foundational AI models, like OpenAI's GPT-4, must comply with stringent documentation and transparency requirements within a year. High-impact AI systems with systemic risks must undergo rigorous evaluations and implement risk mitigation strategies. This approach aims to minimize biases and ensure the ethical deployment of AI technologies. In the United States, the National Institute of Standards and Technology, NIST, has released the AI Risk Management Framework to help organizations manage the unique risks associated with generative AI. This framework emphasizes the importance of transparency, accountability, and bias mitigation in AI systems. China is also taking steps towards comprehensive AI regulation, with a proposed law that would create a national AI office and require annual social responsibility reports from AI companies. These developments highlight the critical need for robust ethical guidelines and regulatory frameworks to ensure responsible AI usage and mitigate potential risks as AI technologies proliferate.
Moving on, let's delve into the next significant development. Max, could you share the details?
Certainly. We have ongoing debates about AI's impact on the job market. As of June 5, 2024, discussions highlight both the potential job displacement and the creation of new employment opportunities driven by AI technologies. Reports indicate that sectors exposed to AI are experiencing significant productivity gains and wage premiums. For example, PwC's Global AI Jobs Barometer shows that sectors with higher AI integration are seeing almost five-fold increases in labor productivity, and job postings for AI-related skills are growing rapidly. McKinsey's analysis predicts profound shifts in job roles and sectors by 2030, with AI leading to both job creation and displacement. Sectors like healthcare, STEM, and finance are expected to see substantial growth, while roles involving repetitive tasks may be automated. This underscores the importance of reskilling and upskilling the workforce to adapt to new AI-driven job demands. The World Economic Forum's Future of Jobs report also emphasizes that nearly a quarter of all jobs globally will change over the next 5 years due to AI and other technological advancements. This highlights the need for continuous learning and adaptation to ensure workers remain competitive in an evolving job market. Overall, the dual impact of AI on the job market stresses the importance of workforce adaptation and the implementation of comprehensive reskilling programs to navigate this transition effectively.
Interesting insights, Max. Now let's discuss the next key development. Could you enlighten us?
Absolutely. We have significant progress in AI for autonomous vehicles. As of June 5, 2024, advancements in autonomous driving technology and new partnerships are making headlines, highlighting the future of transportation. Nissan has begun public road demonstrations of their latest autonomous driving technologies in Japan, showcasing their in-house developments aimed at enhancing vehicle safety and efficiency. In addition, the McKinsey Center for Future Mobility highlights that the development timeline for fully autonomous vehicles is extending, with significant investments required to achieve higher levels of autonomy. Companies like Waymo and Cruise are at the forefront, with substantial funding driving their efforts to bring Level 4 autonomous vehicles to market. Wave, for instance, has secured over $1 billion for AI-driven autonomous vehicle development, underscoring the massive investments in this sector. Moreover, improvements in AI confidence measures are being developed to enhance decision-making in autonomous vehicles, ensuring higher safety and reliability in various driving scenarios. These technological advancements promise safer and more efficient transportation systems, fostering new industry partnerships and attracting significant investments.
Fascinating developments indeed. Now let's move on to the final story for this week. Max, could you share the details?
Of course. Lastly, we have rising concerns about AI-generated election disinformation. As of June 5, 2024, the use of AI to create deepfakes and disinformation is posing significant threats to political campaigns and voter trust. This issue has prompted legislative actions and initiatives worldwide to combat its effects. In the United States, several states including Wisconsin, Florida, and Arizona have introduced laws requiring disclaimers on AI-generated content used in political campaigns. These laws aim to increase transparency and hold accountable those who produce and distribute misleading content. Internationally, efforts are also underway to address this challenge. The European Union and tech companies like Meta and OpenAI have committed to combating AI-generated disinformation through measures such as automatic labeling of AI-generated content. These actions are crucial in maintaining the integrity of elections and ensuring that voters can trust the information they receive. Chapter 4, Finance Series, Investing in Different Asset Classes, Part 4 of 14.
Welcome to Chapter 4 of our Finance series. Today, we're focusing on an important aspect of portfolio diversification: investing in commodities. Max, can you start by explaining what commodities are and why they are significant in an investment portfolio?
Certainly. Commodities are raw materials or primary agricultural products that can be bought and sold, such as gold, oil, or wheat. They are significant in an investment portfolio for several reasons. Firstly, commodities can serve as a hedge against inflation because their prices tend to rise when inflation increases. Secondly, they offer diversification benefits since they often have low correlations with other asset classes like stocks and bonds. This means that when the stock market is volatile, commodities might not be affected in the same way, helping to stabilize the overall portfolio returns. For instance, during economic downturns or periods of high inflation, commodities like gold tend to perform well, providing a safe haven for investors.
That's a great overview. Let's dive deeper into the different types of commodities. Can you explain the differences between hard commodities and soft commodities?
Of course. Hard commodities are natural resources that are mined or extracted, such as gold, silver, oil, and natural gas. These are typically used in the production of goods and have intrinsic value due to their physical properties. Soft commodities, on the other hand, are agricultural products or livestock, like coffee, wheat, corn, and cattle. These are grown or raised and are essential for human consumption and industrial use. Investing in hard commodities often involves trading in futures contracts or purchasing physical assets, while investing in soft commodities can involve agricultural futures, ETFs, or companies engaged in farming and food production.
Given the current economic environment, what are some strategies for investing in commodities?
There are several strategies for investing in commodities. One common approach is direct investment, which involves purchasing physical commodities or futures contracts. For example, buying gold bullion or oil futures. Another strategy is through commodity-focused ETFs and mutual funds, which offer exposure to a basket of commodities without the need to handle the physical assets. Additionally, investing in stocks of companies that produce or deal in commodities, such as mining or agricultural companies, can provide indirect exposure. Diversification within the commodity sector is also important. This can be achieved by spreading investments across different commodities to reduce risk. For instance, an investor might hold positions in both precious metals and agricultural products to balance potential losses in one area with gains in another. Chapter 5, AI Series, ChatGPT Series, Part 4 of 8.
Welcome to Chapter 5 of our AI series. Today, we're delving into the transformative potential of ChatGPT in various industries. Let's start with the finance sector. Max, how is ChatGPT making an impact here?
In the finance sector, ChatGPT is revolutionizing how institutions interact with their customers and manage data. For instance, banks are using ChatGPT to handle customer inquiries more efficiently, providing instant responses to common questions and freeing up human agents for more complex tasks. Additionally, ChatGPT assists with data analysis, helping financial analysts to quickly process and interpret large datasets, which enhances decision-making processes. This application not only improves operational efficiency but also enhances the customer experience by providing timely and accurate information.
What about its role in content creation? How is ChatGPT being utilized there?
ChatGPT is also a game changer in content creation. It automates the generation of various types of content, including blogs, articles, and social media posts. This ensures a consistent and high-quality output tailored to specific audiences. For example, The Washington Post uses an AI tool called Heliograph to generate news stories on sports and election results, demonstrating the potential of AI in journalism. This automation saves time for human writers, allowing them to focus on more strategic and creative tasks, ultimately enhancing productivity and content quality.
What about educational platforms? How is ChatGPT transforming this space?
In education, ChatGPT is revolutionizing personalized learning. It serves as a virtual tutor, providing students with tailored explanations and practice problems based on their individual needs. For instance, platforms like Coursera and Khan Academy are exploring AI-driven tools to offer personalized learning paths and immediate feedback, enhancing the educational experience. This helps in making education more accessible and effective, particularly for remote learners or those needing extra help with complex subjects.
ChatGPT's versatility is indeed impressive. What about its application in legal services?
ChatGPT is transforming legal services by streamlining various processes. It assists lawyers with legal research by quickly sifting through vast amounts of legal texts and case law to find relevant information. Legal firms use ChatGPT to draft documents, such as contracts and legal briefs, reducing the time and effort required for these tasks. Additionally, it helps in client interactions by providing instant responses to common legal queries and scheduling consultations. This enhances the efficiency and accuracy of legal services, making them more accessible and affordable.
That's a wide range of applications. Do you see any potential drawbacks or challenges that need to be addressed?
Yes, while the benefits are significant, there are challenges to consider. One major concern is the potential for bias in AI-generated content. If the training data contains biases, the AI may inadvertently perpetuate those biases in its responses. Additionally, there's the issue of over-reliance on AI, which could lead to reduced human oversight and critical thinking. Ensuring robust ethical guidelines and continuous monitoring of AI systems is crucial to mitigating these risks. Moreover, data privacy and security remain top priorities, as AI systems often handle sensitive information.
Thank you. It's clear that while ChatGPT offers remarkable benefits, careful consideration and management of these challenges are essential. Stay tuned for our next chapter, where we will delve into the future trends and predictions for ChatGPT and similar AI technologies.
Stay connected.
As we wrap up today's insightful exploration of AI in finance, let's delve into the unique artworks that accompany our discussions. Max, there's more to these artworks than meets the eye, isn't there?
Absolutely. Our luxury conceptual digital art is not just a feast for the eyes, it's crafted with potential investment value in mind. Each piece is inspired by and linked to a specific chapter in our podcast, creating a unique narrative context that enhances its appeal. Drawing inspiration from the trajectory of Andy Warhol's iconic prints, which soared in value over time, we anticipate our artworks could similarly appreciate as digital and AI-influenced art gains broader recognition.
Warhol's work took some time to be fully appreciated, didn't it? How does that relate to our art?
That's right. Initially, Warhol's pop art faced skepticism and was met with mixed reactions. Some of his early works were priced modestly, often sold for a few $100s. Yet, over the years, these same pieces have appreciated enormously in value, with some reaching tens of millions at auctions. For instance, Warhol's 8 Elvises originally sold for $100,000 in the 1960s and later fetched over $100 million. We hope our art follows a similar trajectory, initially niche but growing in significance as the intersection of technology and luxury art becomes more mainstream.
And our listeners play a role in this as well, correct?
Indeed, they do. By engaging with our artwork on social media, especially on Twitter where we frequently post updates, our listeners help determine which pieces we feature. The most popular selections by our listeners are initially offered for sale on Etsy. Looking ahead, we're excited to announce plans for the FinanceFrontierAI 2025 Art Collection, a future marketplace where these artworks will be traded like collector's cards. For truly standout pieces, we'll offer exclusive, limited edition artworks as NFTs, showcasing the best of our annual collections.
So, engagement from our listeners can influence which artworks are available?
Exactly. We encourage everyone to let us know if a particular piece captures their imagination. You can reach out through the contact form linked in our show notes or directly comment on our Twitter posts. This not only helps us gauge which artworks are most popular but also fosters a vibrant community around this innovative blend of art and technology.
For our listeners who want to dive deeper and stay ahead with the latest developments, what do you recommend, Max?
I strongly recommend subscribing to our AI Finance 5 newsletter. It's your weekly summary of the top 5 insights from our podcast, crafted to give you a leading edge in AI and finance. Just fill out the contact form linked in our show notes, and every Friday, you'll receive a concise overview of crucial developments directly in your inbox.
Fantastic! And for those who want to continue this discussion and not miss any of our episodes, where should they go?
To ensure you never miss an episode, subscribe to us on Apple Podcasts or Spotify. Your subscription helps us climb the charts and reach more listeners, expanding our community of tech-savvy investors. Plus, it's the best way to stay updated with our latest episodes and the evolving world of AI and finance.
We also want to hear from you, our valued listeners. Your feedback helps us improve and tailor our content to your interests. Here are a couple of questions we'd love your input on. Would you prefer if we created 2 separate series, one focusing exclusively on AI and another on finance, or do you enjoy the combined format we currently have? Would you like a series that goes more in-depth on a single hot topic? Or do you prefer episodes like this one, where we cover the most popular news from the past week? Please let us know your thoughts by commenting on our social media posts, or through the contact form in our show notes. Thank you to everyone who has joined us on this journey. Your curiosity and engagement are what drive us forward. Stay connected, keep exploring, and together, let's uncover the future of technology and finance.
Disclaimer and acknowledgements. This content is for educational purposes only and is not intended as financial or legal advice. We thank sources such as Bloomberg, Reuters, MarketBeat, Market Screener, Yahoo Finance, Daily Sabah, CNN Business, Federal Reserve, Markets Insider, Thrivent, Kiplinger, Fidelity, NatLaw Review, World Economic Forum, Google Cloud, Brennan Center for Justice, Governing, Voting Rights Lab, Reuters Institute, Politico, PwC, McKinsey, and the McKinsey Center for Future Mobility for their contributions to the field, which inspire our discussions. Copyright 2024 Max Vanguard. All rights reserved.